Good evening and welcome to the Thai PBS World. Right now, the whole world is facing challenges on COVID-19 and the spread of the virus. Today, the World Health Organization director has already warned that the medical workers are now operating under uncharted territory. On top of health issues, economic challenges is also another big risk. I asked Santithan Sathien-Thai, Chief Economist from C Group in Singapore, how he sees economic challenges around the world.
There is a high risk that we are heading more towards a derailed scenario rather than just a delayed scenario. I think just a couple of weeks ago, most of the economic research suggests that the coronavirus impact on the Thai economy will just be to delay the economic recovery so that we will have probably the trough of economic activities in Q1, quarter one, and then things will start to improve in second quarter, and then we'll resume back to the trend growth in the third quarter and the fourth quarter. I believe the recent developments now we are seeing is that it's more likely that the disruption will be bigger than that, and that it will last longer as well. And so it's more likely to be a derailed case where the economy won't really be back to trend, perhaps even in the second half of the year. And I think that's really the concerns that I think markets around the world are waking up to, not just in Thailand but around the world. And hence we have seen a lot of markets, equity markets, selling off, especially last week.
And today, financial institutions of the world like IMF and the World Bank Group have stepped up effort in order to cope with the financial risk. They have issued joint statements on how they are ready to help poor countries alleviate the situation of health issue. I also asked Dr. Virathai Santiprapop, Bank of Thailand Governor, how should Thailand be prepared to cope with this economic uncertainty because of the COVID-19?
It's not just only the Thai economy that is facing challenges at this point in time. I guess the outbreak of the COVID-19 virus is the most important factor. For the Thai economy, it has direct effect on the tourism sector, which is a very important sector for the economy. And also we depend a lot on Chinese tourists. It's very unfortunate that the outbreak started in China. That will continue to have adverse impact on the tourism sector for quite some time. And as we all know, a large percentage of Thai population depends on the tourism sector for their income, directly and also indirectly. That is the first channel that the COVID-19 has impact on the Thai economy. The other channel that we quite concerned of if the situation of the outbreak prolongs for quite some time is the impact through supply chain. As we all know, the Thai manufacturing sector is very well integrated into the East Asian supply chain, particularly in electronic sector and automobile sector. When there is a disruption of production in China, certain parts that we need to get, we can't get, and certain parts that we need to export to China, we can't export to China. And this will have disruption impact on the supply chain of certain industry for quite some time.
Many countries in Southeast Asia is trying to fight against COVID-19, the outbreak. But one of the most severely affected is Singapore. And the leader, Prime Minister Lee Hsien Loong, has warned that the country may be facing economic recession. What's your prediction about Thailand? Are we facing economic recession as well?
We have to see how the spread of the COVID-19 will come to an end. I think it's a bit too early at this stage to say that the Thai economy might go into recessions. Baseline scenarios, we should expect to see some growth in the Thai economy this year. At this point, we do not expect the Thai economy to go into recessions. Singapore economy is a small economy and is also much more open than the Thai economy. they don't have the domestic economy as big as a percentage as in the case of Thailand. So we can see that Singapore economy is vulnerable to external adverse shocks than Thailand. I'm not saying that we're not an open economy, we're also an open economy, but relative to Singapore, I think Singapore is more open. So they will be impacted more from the lack of the COVID-19. The challenge that we have now is to find ways to stimulate the domestic economy and also to mitigate impact of the COVID-19 on Thai entrepreneurs and Thai workers. The Monetary Policy Committee of the Bank of Thailand, when we met on February the 5th, at that time, there were a lot of uncertainties about the pattern of the outbreak, but we decided unanimously at the Monetary Policy Committee to lower the policy rate to 1%, which is an historically low level in Thailand, because we saw the need of an urgent action. By lowering the interest rate alone might not provide a big booster to the economy, because interest rate has already been low for quite some time. But at least it helped reduce the financial burden of the borrowers.
On the myth of baht, so many people have raised the issue that perhaps baht value is too strengthening right now. But for you as the Bank of Thailand governor, what do you think is proper rate for Thai baht?
In the case of Thai baht, we have said that we also quite concerned about the pace of the appreciation of the Thai baht last year. And there were certain points that the level of the Thai baht did not reflect the fundamentals of the Thai economy. Export sector was hit by the trade tension last year, but the baht continued to appreciate at a faster pace than our competitors and our trading partners. So that was a concern. But if you look at the factors contributing to the strengthening of the Thai baht, it was driven mainly by large current account surplus that we have. Last year we had current account surplus in the range of about $37 billion US. Although exports were coming down, imports were also coming down faster than exports. And we continued to have a strong tourism proceeds last year, and that contributed to large current account surplus. And when we had large current account surplus, it means simply that there were people who were willing to exchange foreign currencies into Thai baht more than people who were willing to exchange Thai baht into foreign currency, and that led into appreciation of the baht.
As Thailand is still export-driven country, and people may have questions whether it would be probable for the Bank of Thailand to intervene. Appropriate baht exchange rate is 35, 36. Is that probable that you would maintain, or Bank of Thailand would try to maintain that value?
To intervene to bring the baht to that value, that would be an artificial value. And if you know that if you do something artificial, it could have serious unintended consequences. If I draw an analogy, we know that a drought is coming, and people might say that why don't we send aircrafts up there and create artificial rain, but you also need to have proper supportive conditions to be able to benefit from those artificial rain. In the case of artificially managing the currency, it's even more challenging than creating artificial rain. For instance, if everyone knows that the Bank of Thailand is coming into the market, intervening excessively, creating artificial demand for foreign exchange, speculators will just join in because they know that it might not be sustainable, it might not last long. So it's a profit-making opportunities for them, and that will even make it much harder for us to maintain the stability of the baht. And if we try to intervene too much, other countries will not allow us to do so, because if we manipulate the currency to the point that is considered artificially low, other countries will start naming us currency manipulator. We start coming up with retaliation measures. So that policies will not be sustainable. We have to the floating exchange rate regimes that the Bank of Thailand has adopted. We will not go against the fundamental trend of the currency movement, and we need to find ways to address the root cause, the source of the imbalances that I mentioned earlier, that led to the imbalance of inflows and outflows of foreign exchange into the country.
Overall this year, just the first 2 months of this year seems not quite uplifting overall in terms of Thai economy, global economy, but we still have many more months to come this year. What do you like to tell various sectors in Thailand to try to be prepared economically, like corporate sector, individual, SME? What should they get themselves prepared for the economy?
Whether we like it or not, I'm afraid that this is the new normal that we have to face with. Okay, this is the new landscape that we will continue to face with incidences that leads to much higher volatility, much higher level of uncertainty. Risk management will be key. In whatever we do, we need to make sure that we have enough buffer to deal with unexpected events, uncertain events in the future. I can't emphasize more on the need for the public and also for the businesses to improve their risk management capability. And in order to have higher buffer, larger buffer to deal with this, we need to be more productive. We need to be able to generate more income, generate more revenue, so that we can create buffer. So risk management, improve risk management and improve productivity have to be key in whatever we do.
Overall, it's still too soon to say that the world or Thailand is facing economic recession this year. So we have to stay updated on the world economy and its impact from COVID-19. And that's all from Thai PBS World tonight.